Welcome back. You're watching the Commodity Trade. Let's get in Prathamesh Mallya now. He's Chief Analyst, Non-Agri Commodities and Currencies at Angel Broking, who joins us. Prathamesh, sorry for keeping you waiting for such a long time first up. But let's straight start off with your strategies. You've got a buy call on crude oil with a target of 3,800 there. As we were speaking to David, you must have heard there are a lot of monitorables to watch out for today evening as well. The EIA data, the OPEC report will be there, so there will be a better sense of how compliance is panning out to be. You have a buy call ahead of all these data points in the evening. So do you believe that, what the time horizon is, and if we were to attain this, could we scale up even higher? Is there more scope on upside at all?
Good afternoon, Pranay. I think there are two contrasting set of variables, but I believe OPEC maintaining its output quotas and compliance is something what is the oil markets are factoring in. And in that sense, I think oil prices are possibly taking support at this levels, and a possible move of at least $2.5 from here on is what we are looking at, possibly from 2 to 3 trading sessions. And hence the trading strategy that's being advised is at 3,700 and 3,650 stop, and target higher side would be around 3,800 levels. So it's a strategy for 2 to 3 trading sessions. The contrasting side of story is US production being higher. They will continue to produce higher in 2018 is what the EIA monthly report said. So what I think is this all these efforts by OPEC as well as WTI would somewhere get balanced, and we would possibly see oil prices in the near term getting stabilized at around 59 as far as WTI is concerned. As far as Brent goes, 66, 67 is what we're looking at.
All right. You have sell calls on both gold and silver. How much more lower could we go on gold? That's the moot question. 1245 on the COMEX. You have a target of 27,800 on the MCX with a stop loss of roughly 28,300.
Yes, Pranay, I think with the run-up to FOMC and with the markets being factoring in rate hike almost being there, I think gold and silver would possibly move further lower. A fall of rupees 200 to 300 rupees from here on is what we're expecting in gold, and hence we're advising a sell-side strategy in this particular counter. 27,800 would be the targets in the near term. Again, the trading horizon would be around 2 to 3 trading sessions. As far as silver goes, again a fall of around 600 to 700 rupees is what we're looking at from the current levels. Hence, we would advise both in a sell side on both gold and silver.
Right, and you've got a buy call on copper as well with a target of 442. So take us through this, and also will there be no other metals that you will be tactically positioning yourself in for the moment?
I think this being an year end when fund repositioning is happening and seeing a fall across all the base metal packs. So I would not be really long on any of the metal as far as the year end is concerned. But if you're just picking one metal from the entire pack, I would pick copper because this is pretty stable as compared to other metals. And the near term targets for this particular counter in MCX India is close to around 442. The entry point would be around 427, 429. I think possibly the move higher is close to 8 to 10 rupees from here, and is what looking at for copper. But I would not really reposition myself on any of the other metals, may it be lead, the zinc, or for that matter nickel. Possibly there is more fall in this counter in the year, in the possible coming trading sessions before we move into new year.
All right. Before we let you go, would like to get your view on the currency as well, Prathamesh, because we speak to so many economists and bond experts as well. What we are seeing is that the yield is running away to over 7, 7.2, 7.25. Currency remains to be, mostly stable and unperturbed. Ever since the RBI policy, even before that, we are close to the 64.4, 64.5 sort of a handle. So what's the near-term, level that you are seeing? Are we likely to just remain range-bound, or is there any chance of near-term depreciation that could, take place over the next 15 days, 20 days, nearing the month end as well?
I think, Pranay, I think the move for rupee from here on would directly be a reflection of what is happening in the dollar index, discounting of what all is happening in India with regards to GST demonetization. It is behind the back now. Rupee has possibly found a base here, and we see near-term depreciation for the rupee from here on close to 50 to 60 paise from here on. 64.45 is what it is trading at currently. I think 65.2 is what we're looking at if you're asking from 15 trading sessions perspective. And vis-a-vis dollar index, 94 is what it is currently trading at, and we have repeatedly spoken about dollar index being strengthening from here on. 97 would possibly a 2 to 3 months perspective where as far as dollar index is concerned. In that sense, rupee would possibly be weaker from here on.
Fair point, Prathamesh. We're going to leave it at that, but thank you so much for joining in, giving us your strategies, what do you feel about the outlook on crude oil, and giving us a quick view on the currency as well. But let's go into more detail as far